Hello and welcome to BlackPipper Forex. Again, today I have into this is a scalping strategy that is based on the time, especially if you have a very busy schedule and you cannot wait and watch for the right opportunity to come and trade, and especially if you are very very curious about the exact timing of the trade. So this is something that is closely related to mechanical trading. So in this video, I'm going to show you how you can trade GBP USD or any other major pair at a fixed time. So simply you have to choose the time 5:30 GMT. You can convert the 5:30 GMT into your local zones accordingly. Okay, so I have already marked the time 5:30 GMT on my chart. So here the time frame is 15 minutes, and the time frame is 15 minutes, and the time I've chosen is 5:30 GMT. Here on the this candle shows that it's 5:30 GMT time. So what I have to do is at 5:30 GMT I have to see the consolidation range of the market. Like here the market is consolidating in this area, so I have to mark the consolidation with a with a rectangle. Okay, keeping in mind that you have to cover the lows and the highs of the consolidation range. It's a very small range of consolidation. Let me extend the triangle a little, so that once the breakout occurs, I'll be able to spot it right away. Okay, so this is the 5:30 GMT candle. This is the consolidation range. Wait for the range to break out. Here is the breakout. Here the breakout occurs. The breakout occurs at this point, 1.3660. Okay, I mark it with a red horizontal line. So this is my entry point. I'll place my stop loss slightly below the low of this consolidation area, 1.3641. Okay, so it's around 19 pips stop loss here. So in that case, where do you want to put your take profit? Take profit should be at least 1:1. According to this, at least it should be at 19 pips. So from here, if I measure the 19 pips, 19. Okay, it's around 1.3789. Sorry, 1.3679. Okay, so this is our first target, and the next target could be 1:2. That is around, you can add 20 more pips in it, 1.3699. Okay, so we entered here and we put our stop loss around this area. TP1 is at this area, TP2 is at this level. Okay, so simply when the breakout occurs, place the trades, put your stop loss, put your take profit, and simply forget the trade, set and forget. Okay, so let's see another level and discuss how the trade occurred at that level as well. Okay, Again, this is the 5:30 GMT. Let me mark the consolidation first. Okay, so here is the consolidation, and it broke out at this level. So the breakout occurred at 1.3590. Okay, so here's the sell entry in this area. Okay, so here's the sell entry. I put my stop loss slightly above the consolidation mark. Let me measure the entry to stop loss area. It's around 21 pips. So the 21 pips target is at 1.3569. Okay, so here's the take profit one, and it's really coinciding with the previous support. So this is a great level for us to consider for the take profit level at 1:1. However, the market turned opposite, and it took our stop loss in this area with this candle. Okay, so no problem. There are stop losses that occur, and sometimes you win, sometimes you lose. But overall, this strategy remains around 70%. It has a success rate of 70%, and the risk-reward ratio is almost 1:2 for most of the trades. However, this is part of the game. Okay, one thing that you have to learn that when you should not trade, when you should not enter the trade, especially pertinent to this strategy. I recommend not to trade when there is a shadow, on the upside or the downside of. Okay, so here the key point is not to enter the trade if the breakout candle has a wick or shadow. Okay, for example, this breakout candle has the wick to the downside. Wick on the downside shows buying interest. So here, if the buying interest has appeared, it weakens this breakout structure. So rather than entering here, we can avoid the signal. We can just simply forego. Okay, so this is one way. For example, if I had a trade, I had a breakout on this kind of candle, so I had the shadow on the upside. No matter if the trade goes into profit or loss, I would refrain from trading this trade. Okay, so let's cover another example. Okay, so this time we have a consolidation, and the consolidation is some kind of with the small candles Okay, let's mark the consolidation first. Just keep in mind this vertical line is at 5:30 GMT. Okay, so let's mark the consolidation from, okay, this is a very small, very minor up wave. So let's try to cover. Okay. Okay, so you can see here on this candle the breakout occurred, so we marked our entry here. Okay, we will keep our stop loss slightly above the consolidation mark. Okay, let's measure the pip distance. 3557. Okay, around 21 pips. Okay, at 1.1536 we have 1:1. Okay, so this is your entry, this is your stop loss, and this is your take profit. And here in this case it hit the take profit. So this is all how you can trade. Second key point is that ignore the breakout candle if it has a very small size. If it has a very small size, just ignore the candle. For example, if the breakout had occurred on this candle or this kind of candle, I would simply ignore this breakout, because this shows that there is no interest of either buyers or sellers in the market. So you can ignore this kind of entry signal. Okay, and if you have third point is your entry mark would have high probability if the breakout candle has wick or shadow on the opposite side. For example, see this candle, it has a very big wick or shadow on the upside, and the breakout has occurred on the sell side, on the downside. So we have a sell entry here, and here is a wick or shadow on the upside. It indicates a lot of selling interest in this area. So you can simply rely more on such signal. If such a breakout had occurred in this area, that would have given us a lot more confidence in the trade, because such a pattern comes up with a very high probability of success. So that's all for now. Hope you have enjoyed the video. Like and share the video if possible, and leave your queries and feedback in the comment section. Thank you for watching. Take care.